Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, March the 29th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Basically, the overall markets here, as you can see, crude oil down on the day. We're starting to see a separation from crude oil and what we were saying, that correlation between crude oil and the overall equity markets. Crude oil down on the day, really coming to the realization there's a lot of crude out there, and it did cover that gap that I was talking about a few days ago. I meant to mention that yesterday. But the gap is covered, but the overall market is still slumping. There's just a ton of crude oil out there, and with the slowing economy that I've been talking about, it doesn't look like crude oil has much hope for any upside movement for that matter. The overall markets, we're not seeing a whole lot of economic data today, other than we got out the CB consumer confidence, which came in at 96.2 versus 93.9. Now, the overall markets are seeing a bit of a lift and pushing higher. The NASDAQ pretty much screaming higher after being negative today, but that is not due to that data point that we just talked about. It's, yes, Fed Chair Yellen is yelling, and she's yelling about the global economies, and here in the United States is starting to slow, so they need to proceed with caution, meaning there's probably not any rate hikes in the foreseeable futures, or in the foreseeable future, I should say. So the on that data point, that markets really went from negative territory and started screaming higher. NASDAQ up 40, as you can see. E-mini S&Ps up 7, but if we take a tighter look and go down to this is exactly when Janet Yellen started talking, and the market had a rip your face off rally from negative like 2 or 3 to up 10 in the E-mini S&Ps. Not really a rip your face off rally, but on a chart it looks pretty screaming to the upside. So the market continues to look at bad data as good for easy money policy and pushing higher, despite the fact that a lot of companies are not making money. It doesn't matter these days. Anyway, on to some trades that I've done. Yesterday I did a couple of trades later on in the day, and basically some defensive stuff. We did an Iron Condor webinar not too long ago, and a couple of these trades are from that Iron Condor webinar, and I needed to defend some of those. And with Adobe, ticker symbol ADBE, I had on an Iron Condor, and I had on the April 65, 70, 90, 92 and a half Iron Condor, and I originally collected $1.24 for that. So because we're trading right here at the 93, I've been tested on this a couple of times off of that earnings number. I didn't do anything to get aggressive with it. As the market opened up and just started slumping, I just kind of held on to it. So I never defended that right away, but I decided today I probably should, because it looks like we're starting to just get stuck in this little trend for Adobe for the foreseeable future. So I rolled that, the puts up, so that I could collect a little bit more credit, increase my break even on that. So I rolled the April 65-70 put spread portion of the Iron Condor to the April 85-90 put spread, and collected another 71 cents for that. So now I've rolled that Iron Condor into an Iron Butterfly, which I talked about in that series where I talked about the Iron Condor, the Iron Butterfly, and then how to defend that Iron Condor. So you can go to protraderstrategies.com and look at that. In YAHOO, I did it a little bit different. I didn't want to get too aggressive because my wings are really tight on this. With the ADBE, I had 5 tick wide. With the YHOO, I only had basically 2 ticks wide from the 24 to the 26. So YHOO, ticker symbol YHOO, I had on the April 24, 26, 35, 37 iron condor in there, and I originally collected 50 cents for that. So I rolled my 24, 26 put spread up to the 32, 34 put spread. So it's not really an iron butterfly, it's just a really tight iron condor still, and collected another 25 cents for that as well. So with that trade, I have a total collection of about 75 cents, which increases my break even by that extra 25-cent credit that I got for that roll. All right, so that is talked about in detail in those webinars. So if that seems to be a little bit confusing, you can go to protraderstrategies.com and find out all of those rules for that. But it's basically around when I'm being tested on my break even and or on one of my defined risk sides. So with only 17 days to go, I figured now was the time to really, or actually it was yesterday, so 18 days to go, now was the time to really get defensive with that, if I was going to get defensive at all. And then in Southwest Airlines, ticker symbol LUV, again, this was from one of our webinars on gearing up for the earnings trade. So we built this strategy around that, and the market's kind of gone sideways, decayed out all of the premium that I could get for the April 1 weeklies with just a few days to go to expiration. So that's the time where we roll that out. So I rolled the April 1 to the April monthlies, and they are the 45 calls, collected another 50 cents for that. So what I'm trying to do is lower my overall basis on this calendar setup for the earnings trade. So I'm long the 45 calls in the cycle that has that binary event, and I collected another 50 cents for that. So I'm trying to lower my cost basis on those long calls for that binary event. And that was a nice little trade there. So now I'm looking pretty good on that. I basically bought those calls for about 50 cents now. So originally it was $1. If I hadn't done this strategy at all, I would have been paying about $1.50 for it. So I've lowered that from basically $1.50 on those long calls to 50 cents. So that's working out just as planned. So if we can continue to see this go sideways, watch those calls decay, fall off, go into the binary event and get that ramp up in volatility, it would be the perfect scenario for that strategy. And then into Walmart, I'm looking to get out of this. We did this iron condor strategy on the same webinar that I was speaking about. This is the perfect scenario for an iron condor where you get volatility contraction. We did it back on in early February. I think it was right around February at this time. And we've gotten that vol contraction and a sideways market. So the perfect scenario for this iron condor. It's in a tight range, trading sideways, volatilities come out. It's exactly what you try to write up an iron condor for. So I had on the April 57.5, 60, 70, 72.5 iron condor in there. Originally sold it for 45 cents. I've let this one run out just because it's really trending sideways nicely, and covered that for 17 cents. All right, so that trade also coming off, and it's right around those probabilities I talked about for the iron condor working out versus the iron condor not working out and having to defend it. So those probabilities are working out nicely. So all in all, a nice profit for all of those strategies we built around that iron condor and iron butterfly webinar. So go to Pro Trader Strategies, check that out. Friday, check out our webinar we're having. You can go to Pro Trader Strategies and sign up for that. It should be a really good one. We've been getting a lot of people and a lot of input onto what you guys are looking at, and I put my rules around something that you guys want to implement into your overall portfolio. So That's all I got for you guys today. If you can't take that, take it easy.